mortgage rates just almost, well, they did double. They've come down a little bit since, but they're still like, I don't know, 80, 85% where they were a year ago. It's just math in many cases, right?
Right. I mean, so we had artificially low interest rates and mortgage rates, not just during the pandemic, for the last 10 years. And that enticed a lot of people to buy into the housing market because even though the prices were going up, their payments were low. But now that mortgage rates have surged to actually a more historically normal level, that's meant that over the last year, the typical home buyer mortgage payment's gone up by something like 50% year over year, whereas the average wage in America has only gone up by about 5.5%. So you're right. It's simple math. Home buyers can't afford the cost of a house, either on the down payment in the price or on the ongoing mortgage payment. And some very concerning statistics I'm seeing now suggest that the quality of loans being issued in the housing market over the last couple of years is starting to approach the kind of poor level of quality in 05, 06, 07. When I look at the metrics, yes. And this is something that is going to be controversial for me to say because the mainstream narrative on this is saying there's only good loans in the US housing market. But when you look at data from Fannie Mae and look at what's called the debt to income ratio, basically measures what's the mortgage payment and how much are the borrower debt service payments as a relationship to income. That debt to income ratio now is as high as it was in 06, 07 at the peak of the last housing bubble, suggesting that borrowers today are just as strapped in their ability or inability to afford the monthly mortgage payments. And so this is something that I think is going to cause foreclosures to surge over the next couple of years, which is going to, of course, make the housing crash even worse.
Wow. Yeah, that is very concerning. And I mean, right now, the Fed is still hiking rates, right? It still may hike them substantially from here. Who knows, right? So I got to assume that you must not think, and don't let me put words in your mouth, but you must not think that we're out of the woods yet in terms of future mortgage rate hikes. It seems like you can make a pretty decent argument that the cost of a mortgage is going to continue to rise from here for some time.
It's an interesting question. I think you might be right, especially if the inflationary environment persists, the Fed's likely going to continue hiking interest rates. But altogether, I actually don't think it matters that much. I mean, on one hand, yes, you're right. The surge in mortgage rates has priced many borrowers out of the market, but I want to actually spin it a different way. Now that we're entering a declining home price environment, right? Think about a buyer. The FOMO of the last couple of years is now gone because prices are starting to go down. So the buyer can say to themselves, well, I'm going to wait to buy now. Layer on, what if there's a perception that mortgage rates are going to go down into the future? Now, all of a sudden, a borrower or a buyer would say, okay, so now prices are going down and maybe mortgage rates are going to go down into the future. Well, then why would I have any incentive to buy today? Because if I buy in a year, I'm going to get a better deal. And so either way, with whatever happens with mortgage rates, say they go up another 50 basis points or say they go down 50 basis points, I actually don't think it's going to impact home buyer demand that much. Meaning that home buyer demand is going to continue to stay near 10-year low levels as long as this housing downturn continues, and as long as this economic recession continues.
Okay, I want to get to the question of, could there be a Goldilocks moment here at some point? So much of the market is anticipating a Fed pivot to happen, soon. And look, whether it happens soon or later, yes, at some point the Fed will likely revert back to an easing policy at some point in the future. Could there be a Goldilocks moment lurking out there in the next year or two where home prices have corrected pretty hard, and then the Fed brings interest rates down, and so mortgage rates come down, but houses haven't quite picked back up yet, and you can kind of get the best of both worlds where you get a lower price and a lower mortgage rate?
100%. I mean, that's exactly what happened in the last housing crash. I mean, 2010, 2011, those are some of the best times ever to buy a home in America. And I think we're going to see some similar deals this time around. So, an intelligent home buyer, an intelligent real estate investor who's looking at the data, especially for their city, they're going to be primed to take an opportunity here to get a home on the cheap. And eventually, you're right, at a mortgage rate that's cheaper today, because eventually the Fed will pivot. They always do. The question is, how bad is the economic downturn and the housing downturn going to be when they do pivot?
All right. And look, given the fact that there's a lot of economic storm clouds out there right now, I do get feedback from folks saying, God, Adam, it seems like everybody you bring on your channel is really bearish. And it's not because I seek out bearish people. I just seek out people that are data driven, and the data is not very good right now. But I really look forward to having you back on this program, Nick, when you see signs at some point in the future that it would be a good buying opportunity for folks so that we can get that word out to folks.
Sure. I'm really excited to do that. My company, Reventure Consulting, and on my YouTube channel, I have a home price model for every single metro area in America where I have kind of a reservation price where if values go down a certain amount based off the fundamentals in the market, like earnings and rent, it's going to make sense to buy in that market. And I am very excited for the point in time where I can actually make a buy recommendation on different housing markets in America. But the reality is we are not there yet. And we're not even close to there yet because inflation adjusted home prices, even with the decline over the last couple of months, they're still at an all-time high, higher than they were in 07. So I know it's frustrating for a lot of people out there who have been waiting to buy a house or waiting to buy an investment property. But an important thing to understand is that a housing crash historically takes some time to play out, right? It's not so much like a stock market crash that can happen over the course of a year to 18 months. Historically, housing downturns take, on average, 4 to 5 years to go from peak to trough. Now, that doesn't mean you have to wait from peak to trough. You don't have to wait 5 years. A lot of the price declines are going to occur in the first 2 to 3, but it's just important to understand housing from the perspective that it is a slow moving asset on the downside. And that when we enter a housing crash, whether it was 07 to 2012, that took 5 years. Whether it was a local housing crash in LA in the 90s, that took 5 years. And so it's important to have some patience as far as the housing market goes. And those who are patient, they're going to be rewarded with some great buying opportunities into the future.
Great, great. And I'm just curious, if this correction plays out the way you think it will, where do you put the starting of that clock? Was that a January of this year, spring of this year?
Yeah, that clock is typically from the peak price to the bottom price. So I would say that clock started a month or two ago when home prices started to go down in America. So I would expect that over the next several years, home prices are going to continue to go down. And if history repeats itself, we would see a trough and a bottom of the housing market in something like 2026 or 2027.
If you enjoyed this video clip, click here to watch another one you should like.